Everyone, in this video I am talking to you about moving averages, the simple and the exponential moving averages. What do we mean by moving averages in forex trading? Moving averages are among the most commonly used technical analysis tools by traders and investors all over the world. They help smooth out price data to identify the direction of a trend. You feel they also help to filter out market noise and provide dynamic support and resistance levels. Understanding the two primary types, that's the simple moving averages SMA and exponential moving averages EMA, is essential to effectively applying moving averages in trading strategies. Now, what do you mean by moving averages again? A moving average calculates the average price of an asset over a specific number of periods, such as days or hours. It moves because it continuously updates with new price data, making it a dynamic indicator. Moving averages help identify whether prices are trending upward or downward or moving sideways. Traders use moving averages to confirm trends, spot reversals, and generate buy or sell signals. Now, let's look at simple moving averages or moving average SMA. The simple moving average is the most straightforward moving average type. It is calculated by adding the closing prices of an asset for a fixed number of periods and dividing it by that number of periods. Now, the formula for the moving averages is right here before me, but let's look at the characteristics of the simple moving averages. It gives equal weight to all periods, smoothing price fluctuations evenly. It reacts slower to recent price changes due to equal weighing. Then is useful for identifying stronger term trends. Then common SMAs or simple moving averages include 50-day and 200-day averages. Now, let's look at the exponential moving averages or moving average EMA. The exponential moving average gives more weight to recent prices, making it more responsive to new price information than the SMA. Now, the way you calculate this, the EMA uses a smoother factor or multiplier to weigh recent data more heavily, and the formula also is right here before me. Now, let's look at the characteristics of the exponential moving averages. It responds faster to price changes, making it better for short-term trading. Then it captures recent market momentum more effectively than the simple moving averages. Apart from this, it is common EMAs include 12-day and 26-day and 9-day EMA for specific trading strategies. So the differences are what I have explained to you. Now, how are traders going to use moving averages? Trend identification is one way. Prices above a moving average indicates an upward price, an uptrend, while prices below a moving average suggest a downtrend. Now, it also helps us to know the support and resistance. Moving averages can act as dynamic support or resistance levels during trending markets. Apart from this, it is a signal generation, the crossover. When a shorter moving average crossover above a longer moving average, it signals a potential bullish trend. That is the golden cross. The opposite is bearish signal, which is the dead cross. What it's saying is that the moving averages will come this way. They are like two wires. Let me use the cord of my phone as example here. So the two wires are like that. At the point this one is crossing this one, the short-term moving averages, which is usually down, and it's crossing up. It's crossing up like this. That means the market is going uptrend. Once it's crossing it up from down, that means it's going uptrend. The market will go uptrend, and then it will be up for a long time. It will be above. This one will be down. But when the market is this one that is slow, or a shorter is crossing this market, is crossing it down, that means the market is going to go down. This thing I'm telling you, I have used it in my initial days of trading. I use it. That was what I was using. It works very good for me in like a ranging market. So when it crosses it, it will grow down. When it crosses it up, I will go and buy. When it crosses it down, I will buy, I will sell. When it crosses it up, I will buy. So there are many other things that affect the market. If the market, things change in the market, it may not work the way as simple as it is. So for a starter, you can try it on a demo account and see how it goes. So let me talk about the signal generation again using the moving averages. You have the crossovers. When a shorter moving averages crosses above a longer moving average, it signals a potential bullish trend. Potential. Everything in this forex trading is probability. That's why sometimes people use stop loss, so that if it doesn't go in their favor, they will not lose their account. And if it goes in their favor, they make money. So that is called the golden cross. Why? If the shorter one moves in the opposite direction and it crosses below the longer one, then there's the bearish signal. Signal. Not exactly. The signal may work, it may not work. But most times it works, and that's why it is used. So that is that. Now, we can also use this moving average for price crossing moving average. When price crosses above or below a moving average, it can signal buy or sell opportunities. You see, now I'm introducing you to everything about the forex. You have to know everything. You can't just know one and just leave. That's why some people are saying that all those people that are teaching you forex, they don't know anything. Don't mind him. Don't mind the guy. There's a guy on TikTok or thereabout just talking. He just come and say this. I agree. You can't flip $50 to $1 million. What magic did you do? And you do that in a week? You're a gambler, man. Even in a month, even a year, you're a gambler. You're a gambler if that is the case. Because that means you're just placing it anyhow. And then you're a gambler. So don't do that. So moving averages simplify price data to reveal market direction and filter noise. The simple moving averages or SMA provides a smooth, stable indication, ideal for longer term analysis, while the exponential moving averages or EMA's sensitivity to recent prices benefit short-term traders. Both types are vital in analysis and often combined with other tools to enhance trading strategies. I have hinted about pin bar. We are still coming to that later. I've hinted about the news feed. I've hinted about the trend line. So all those ones, you use them with these moving averages. So this one confirming, this strategy confirming, this one confirm it. You will know where the price is going. So you learn them. Then with time, you just stick to one or two, and then even the thing now becomes part of you. You don't even need to know what you are using. You're just trading and making profit. So mastering simple and exponential moving averages enables traders to better understand price trends, identify signals, and improve overall trading performance. So this is Dr. Olubengade's YouTube channel. On this channel, I teach you how to make money both offline and online. Currently, every day by 5 p.m. on this channel, I will bring you information I'll bring you a video on forex. So come along and learn and trade. In the next few weeks, I'm going to start market analysis, weekly analysis, or even daily analysis as my time permits. So please subscribe to this channel, like this video, share the link of this video with family and friends. And if you have adverts or anything you want me to do for you, contact me by sending me a WhatsApp message on 080-369-10988. I also do account management. So contact me and I'll help you to see how everything is going to go fine and how everything is going to be. Until I come your way in the next one, this video popping up by the side is the next one you need to watch from my channel. Let me say a shout out to Lara Lawi. She's a devoted member of this channel. I've been buying me coffee for the past 4 months. She has been buying me coffee for the past 4 months. So I want you to also come buy me a coffee by joining my membership and paying me a token. And you can do that. You see the join, just look down below the line there, below where the title of this video is. You see join. click on it, and the different options available are there. All my friends in USA, Canada, and other places, click it and join and support me. Let's make this thing happen together. Let me be able to continue educating you in this financial aspect and help you grow. For your information, I have certificate in insurance from the Chartered Insurance Institute of Nigeria. Apart from that, I have developed myself so much and undergone so many training because I want to help you. I want to help myself, help my family, help the society, help the nation, help the whole world, and help you too. And that is why I am doing all this. So, until I come your way in the next one, Lara Laoye, thank you. A big shout out to Lara Laoye. This is Lara Laoye, beautiful Lara Laoye, member of my channel. Support me too and join my membership.